Welcome. We are on the floor of the New York Stock Exchange. We are here with our guest. It's Mark Otto, Managing Director at Streicher Co. Mark, thank you so much for being with us.
Thanks for having me back, Lina.
So, Mark, the market is definitely down today. It's the second day in a row. Of course, a lot of fear at the moment. Definitely, we can notice the Syria effect that actually we noticed already at the closing of yesterday. How worried is the market?
It certainly is. The volatility index is up 9% right now. It seems as though the Syria situation is overshadowing the positive. We had positive macroeconomic data out of China last night and more out of Germany this morning. However, Syria is the focus right now.
The thing is, it's not only Syria, though. We can definitely say that. Apart from the Federal Reserve tapering, we also have the situation in Europe. We have Italy that is kind of unstable at the moment, at least politically. Then we have an upcoming election in Germany. And also here, the debt ceiling debate probably will ignite again the entire month of September.
Absolutely. There's definitely some flare-ups around the globe. On the horizon, we have the G20. So China has said that they won't meet with Japan at the G20. You have Obama, who's not going to go to Russia for the next meeting either. So, there's a lot of tension in the air. You could feel it in the market. Certainly, it's reflected in the volatility index right now. Another thing on the move right now is gold climbing higher. So, gold's up 27 points right now at 1420. Part of that's due to the rupee getting crushed in India, but it's also, reflective of what's going on here. Another thing to watch is oil. Oil is slowly climbing higher and higher and getting closer to 110.
Definitely the Syria effect, in both cases, gold and oil. So is this, the problem is also that we have totally lack of volumes. August seems to be the second worst month in terms of volume in a few years. So what do you think it might happen? This problem that with the volumes will really exaggerate any movement up or down?
Certainly, it'll amplify the situation. Right now, the latest headlines are Obama could order a strike as soon as Thursday. Reports I was reading last night indicate that UN weapons inspectors are on the ground, and they're supposed to be there till Sunday. So that's something to actually take into consideration if they're going to strike. If those inspectors are still on the ground, obviously they can be taken up off the ground if need be. However, the developments out of Syria are being closely monitored. And you could see the reaction, particularly in oil and gold right now.
How to navigate in this market, Mark? I mean, people probably are going to stay on the sidelines until we have clarity, even though we're already seeing, you were saying gold, you've seen already people moving towards, safe havens.
I believe that, the decline in the market for the last few weeks leading up to, the past few days, a lot of people are trying to price in QE3 unwind. So, more and more rhetoric from the FOMC, it seems as though more and more speakers are saying that it's going to be sooner than later. So, part of that pullback is due to that. I'd say probably most of it up to the last couple of days. So now we have this perfect storm sort of occurring with the Syria effect and the lack of volume. So hardest hit sectors we're seeing today are financials, techs, and telecoms. What I'm going to actually be looking for going forward is if there is a rotation into those defensive sectors, rotation back into things like healthcare, back into things that are particular safe havens as far as the market's concerned.
So tell me some numbers. I know that the situation is so critical and the volatility is not going to help, but which are the levels of the S&P 500 you're looking at right now?
Well, they keep going through them, so I'm running out of them. 1636 on the downside is support. Then we're going to have 1631 and then 1625. On the upside from here, 1640 is actually a level we just crested over. 1644 and then 1653.
We'll see. Let's try to navigate this market. It's not easy.
All right.
Thank you, Mark, for being with us.
Thank you.
And thank you for watching.